Joins us now, the CFO of BBVA. Luisa, thank you so much for joining us. I can see the lights are on there in Spain, which is welcome after yesterday. But let's just get into the numbers because we know it's been extremely volatile on markets, which means it's good news for your Forex and equities portfolio. You've introduced a lot of structured products in recent times. So just how were you poised to benefit from that volatility?
Well, I think, first of all, as you've mentioned, we really put forward an excellent set of results. I would like to highlight three aspects of them. The first one has to do with profitability and shareholder metrics. We've posted a 20.2% ROTE in the quarter. In addition, tangible book value per share growing at that 14% on an annual basis. On the second level, as you mentioned, the earnings have been excellent with that 23% current year-on-year growth at 2.7 billion euros, but primarily driven by activity growth, which has grown by 15%. But also the third thing that I would highlight as well is that capital has come in at 13.09%, which I'm sure is going to be also very well seen by investors. And as you've mentioned, this leads us to really be able to reaffirm that guidance despite the uncertainty of the high teen ROTE for 2025. And as you've mentioned, obviously, with our especially CIB business, volatility has allowed us to also deliver what has been an excellent quarter in the year also for that business.
The profitability is certainly coming in much higher than anticipated by the market today. But the net interest income line, I want to get to that 6.4 billion euros in the first quarter. We know with all the uncertainty that the ECB does not have a clue as to what it's going to be doing now in coming meetings around interest rates because there are so many twists and turns around this tariff story. What is that doing to your ability to forecast that net interest income for the foreseeable future?
Well, we do a forecasting, which is obviously ongoing throughout the book. But what I would like to highlight is that the strong performance of NII, especially in Spain, quarter on quarter, that growth of 1%, but also 1.2% year on year, is highlighting that we've been able to compensate that rate pressure by activity growth. Spain has grown 6.6% year on year, its lending book, but also by the ALCO activity that we do also in the purchasing of bonds. And that has been able to offset that rate pressure. Going forward, we do believe that terminal rates are still at around the 2% with a strong bias to perhaps the 1.75%. But within that, we do expect to be able to maintain the guidance despite that rate pressure at around the low, slightly negative NII for the year.
Luisa, lovely to see you, and especially with that incredibly strong ROTE, which really is eye-popping. Look, let's move on to the contentious situation between you and Sabadell. You've got approval from the stock market supervisor, the CNMV. We think you're going to get supervisory approval from the competition watchdog, which is the CNMC. I'm getting my acronyms right here as well. Any chance of bringing the Spanish government on side?
Well, I think just to clarify, right now, what we're doing is pending the approval from the CNMC. The CNMC still needs to approve the deal, and what we think is will happen is that they will be approving the deal, but imposing remedies on the transaction, remedies that are quite, important remedies that are unprecedented for deals of this nature. These remedies cover topics that are obviously competition topics, but address also social dimensions that were raised as potential concerns by the authorities throughout the process, and things like financial inclusion, like cohesion in the territories, like SME lending. So I think in that regard, the authorization will come with very demanding remedies on the table, and we hope that will be taken into account by the authorities.
But the Spanish government still does oppose it, as does Sabadell as well. So you're having to remain in the hostile camp rather than a friendly takeover, aren't you?
Well, I think here really what we're seeing is that since the beginning, we've been, I think, very friendly to the shareholders of Sabadell, and really with as much of a friendly approach as possible. What really matters, I think, in the transaction is that we're coming to the end of the process. We really are hoping to get that authorization from the CNMC, again, with remedies that are going to be imposed, that are going to be demanding and, I repeat, unprecedented for a deal of this nature, and remedies that cover competition topics, but social dimensions with regards to potential concerns that the authorities and other stakeholders could have in the deal regarding especially SME lending. Let me remind that this deal is a growth deal. This is a deal that is combining two very strong entities enabling growth in Spain. And we're going to be unlocking the potential to invest a further 5 billion euros into the real economy when the deal gets done. So this is really about growth, about building strong leaders, which I think is in the context of Europe what we need. We need those large banks to really push forward competitiveness in Europe. This is the do or die moment in Europe. And I think these are the type of deals that are needed.